Stocks are mixed for the day. Gold and bonds down. I missed the program yesterday because I was writhing in pain. Actually, it's been going on about 2 days. I apparently slipped a disc and my sciatic nerve was paining me to the point that if you'd given me a chainsaw, I would have cut my leg off. After 3 doctor's visits, I am at least well enough to do the show for you today. Please forgive me. I think that's the first time in 3 years or so that I might have missed a show. So thank you for your patience and no need to send me best wishes. You guys are always so kind at doing that, but I am getting better on the mend, and God willing, I'll be back 180% soon. So let's jump into these charts. What do we see going on? First thing we do is we jump into the weekly, of course, on the S&P 500. And so far, we've got a strong down weekly candle, price percent oscillator spiking down, derivative oscillators losing downward momentum. But again, after 2 prior weeks of a sideways slide, the market is, of course, moving in which direction? Well, the direction of course, our last weekly vertical crossover. All things being equal, remember, our rule is the market tends to move in the direction of the largest chart. The friend is your trend until the end, and always put that last part. The trend is your friend until the end. Well, isn't over yet. And we see, again, going from the weekly to the 2-day, we actually see that the market has been sort of bounding around a point of about 264.60 or 265.67. And that point is important to pay attention to because it hit that on the 2-day chart back on the 26th of November and back on the 29th of October. So the market has sort of been bound in that range. We want to pay attention to that and see if indeed the market continues to drop below that. That is important for us. It's hit that point twice before, actually 3 times before. So keep your eye on that as far as the 2-day candles go. Latest 2-day candle, of course, on Thursday, first day of the latest 2-day candle, down a little bit. It's what that candle's showing us. Price percent oscillator has flipped over to the negative, and the derivative oscillator, well, it's flipped over also. So we'll continue to keep our eye on things there. 4-hour chart, what do we see? It looks like the derivative oscillator, of course, has gone positive and then sort of dropped that in the afternoon as things cranked over down. Now, again, just barely down 0.03%, not 0.3% or 3%, but 0.03% down. So just barely. Again, looks like things have sort of topped off and started moving over again. So keep in mind where things are on these charts. We continue to see the market weak, and we do see it trying to test a bottom. So that 4-hour chart's going down. That 2-day chart is now crossed over going down. And we, of course, see the market hitting that range-bound point of about 265.51. So if it really starts to smash below that, pay close attention to that for a good jumping in point potentially. So we are going to go from the S&P 500 to the NASDAQ 100. It was up 0.03% for the day, but again, red down candle for the week. Price percent oscillator not going at the same strong angle the S&P is, but the NASDAQ is going down. Derivative oscillator losing downward momentum. And again, the candle is showing us that, as well as the price percent oscillator up a little bit for the day, as we said. First day of the latest 2-day candle. Now again, unlike the S&P, the Qs is actually has a little bit of what we call schizophrenia going on. The weekly is in a confirmed down move. The 2 days in a confirmed up move. Price percent oscillators heading up. Derivative oscillators positive. And the first day of this latest 2-day candle is a green spinning top, means indecision tending up. Again, all that movement over the last 3 days is well within the bounds of that prior red down candle for the 2-day chart, ending on December the 10th, Monday, this past Monday. So just keep your eye on things. If we do see either enough strength in the 2-day to rotate the weekly over going up, that's one thing. If we see the 2-day move over down, it'll give us an opportunity to jump back into a down trade on the Qs. And what do we see on the 4-hour chart? Of course, we see that it is positive, just pulling away from the red signal line in the afternoon, even with the down move on the 4-hour candles. Now remember, the candles are not showing the positive up move for the day. These are Heikin Ashi candlesticks. They're different. They show average pace. They are different than your standard candlesticks. You don't know what that's about. We have great trainings at the website, chartingwealth.com, and our YouTube channel. About 100,000 people have taken that free training on the Heikin Ashi candlesticks, Heikien ASHI. You can look that up on Google. I think we're the top rated video there. You can also find us on our website, chartingwealth.com, and at our YouTube channel. So things are, again, as far as the price percent oscillator heading up, we're just waiting for the cues to sort itself out. Is it going to move back in the direction of the largest chart? That'll have to happen first on the 2-day chart before we have any chance of jumping into a trade. We go from the weekly on the cues to the weekly on TLT. What do we see there? Well, down 0.24% for the day. We see a strong weekly up candle, the strongest we've seen, gosh, looking back at the chart, maybe to the week ending back in June, that would have been June the 1st. So again, strong up week as far as candles go. Derivative oscillator gaining lots of upward momentum. Price percent oscillator heading up, even though down for the day on Thursday. We go to the 2-day chart. What do we see? Well, of course, that 2-day chart's topped out right around the 118 mark, 118.50, something like that. Derivative oscillators losing momentum. Price percent oscillators not heading up as strong as it previously had been. We see that so far the first day of this latest 2-day candle is a red, almost a doji spinning top. That means indecision tending down. Price movement is above the 2-day chart quite strongly. So we'll keep our eye on things, see how that shakes out. What's going on that 4-hour chart? Well, of course, if you were in that trade moving up, that 4-hour chart crossed over going down in the afternoon on Wednesday. You had a jumping out point sometime in the morning if you had not gotten out after it already topped out all the way back on the 6th. Again, topped out then, and then just sort of down, sideways, up a little, and then back over down for the last 2 days. Solid. So if you jumped in and rode this pony up quite nicely, one thing that you want to be careful of is as it starts cutting over, going down, not to lose what you've gained. Of course, what's the opportunity with this? Well, if things sort themselves out, crosses back over, going up before the 2-day and the weekly turn negative, you can jump back in and ride up bonds. And again, all things being equal, what does the big chart tell us? Well, of course, it tells us that bonds are still heading up. So we'll continue to keep our eye on things, watch, and see what we see. So we go from the weekly on bonds lastly to gold. Gold down for the day 0.22%. Second week of up movement, it looks like in gold. Derivative oscillator gaining upward momentum. Price percent oscillator headed up quite decidedly. We go to the first day of the latest 2-day chart. And of course, what do we see there? We see a doji. Again, things look like they're topping off somewhere around the 117.70 mark, sort of where things have peaked. And over the last 3 days, some significant weakening and down movement. Derivative oscillators not quite flat. The price percent oscillator also not quite flat. So we'll keep our eye on things. Again, remember, gold and bonds are both in confirmed up moves. We check out that 4-hour chart, and of course, it's crossed over going down as things have slid sideways. Maybe it will continue down for a while as long as the 2-day and the weekly stay in confirmed up moves. When it does cross over going back up, it will give you a jumping in point to ride further up movement on gold if that does occur. So keep that in the back of your mind. Put that in your daily market notes. Pay attention to that. Be cognizant of it and be ready to act if and when the charts present themselves for that practice trade. God bless, my friends. All the best. Thank you all for everyone who has ordered our book and contributed on Patreon. We so appreciate your help and support. You can find all that information in the show notes that come out with every single show. If you're not a subscriber, go to chartingwealth.com, put in your email address and your name, and we'll put you on that list, and you will receive these daily market reviews, plus the weekly market review, plus other great stuff as it comes out as a subscriber for free. God bless. All the best from the whole team here at Charting Wealth World Headquarters.